So DaVinci, what you are saying is that this extremely strong confirmed divergence is just as strong as the last one we have seen at the bear market bottom.
The stock market is an all-time high. The numbers we're about to show you signal an imminent recession.
Today, for the Bitcoin price with DaVinciJ15, we will talk about the confirmed divergence we are having right now. And guys, guess what? The last time we had it was right here at the bear market low. And according to DaVinciJ15, this is a very, very strong divergence. We will talk about that, and we will also talk about what that means for the Bitcoin price. And also towards the end of the episode, even more important, guys, we will go into a very interesting tweet here where our friend, our economist here, was actually posting the cycle returns of the stock market. And you can see right now we are in a 10-year cycle of 370%. And that seems quite nice, right? But it's the second longest one and the second highest one in terms of returns. But what we will do with DaVinci, we will pull out an Excel spreadsheet and make some little calculations and show you exactly why the real returns in that decade is only below 1% in that 10 years. And we will tell you why this is extremely dangerous and why it might point towards the fact that the recession is coming even sooner than you might think. And that being said, DaVinci, we want to come to the most important question of today. How are you doing today, my man?
I'm doing great, man. How are you doing?
I'm doing extremely well, and I must say it's the last day of the year, and this might be the best episode of the year. And I'm not joking, guys. I mean, you can quote me on that in the end. Make sure you smash up the like button, and DaVinci, let's get it started. Bitcoin TA and then economics. Both is extremely fire content.
Exactly. Well, I'd like to say Happy New Year to everybody on this New Year's Eve. And yeah, I hope to see everyone in the next decade.
Yes, man.
I know officially
it's not a long way to go.
Anyways, let's go on to the TA here. So as you can see here, what I've drawn is this AB equals CD. And this is actually called a trade location, where this is a reversal, right? So an AB equals CD, when it plays out, means that that this is a potential reversal zone where prices will go the opposite direction. So you also have the what's it called, the 61.8 from the last local bottom to this local top, and we are here bouncing around on the 61.8. So this is all looking really bullish. And then if we take a look at the MACD, we found this today as we're just preparing for the episode. We have here is a divergence that's actually been confirmed right here. You can see that, right? All this convergence of information here makes for a very powerful trade, right? That we could possibly go a lot higher from here, and this might be like I honestly thought we were going to dump down further. I honestly thought so, but after seeing all this evidence, I have to change my mind here.
It's just a massive confluence of confirmations right here. And
exactly.
the interesting thing is, I mean, looking at the internet landscape, it's very nice to see that no one is talking, or maybe you can quote, you can tell me if I'm wrong, no one was really talking about the divergence. And the simple fact that it is so strong, but yet no one is really talking about it, means that it might actually be a very significant sign. DaVinci, might you maybe also go back in time and show us the last time this confirmed divergence actually happened, and our dear viewers will see how powerful it in fact is.
So, well, the last time it happened was right about here. You could see that we had the divergence, right, between here and here, and it confirmed right here. You can see that it confirmed on this level right here, and that, where was that? That was right at the absolute bottom here. I mean, dudes, man, we have something big here.
Yes.
When it comes to the divergence. I remember seeing this and wondering, yeah, you know what, we should get another dump, right? We went sideways and we got another dump, but I was expecting it to go lower than this one, but it didn't.
You changed your opinion in March. I just want to say that. Everyone can go back and
exactly.
fact check that.
Exactly. And then once we started reversing off of here, I started seeing that signs that, hey, you know what, this thing's going to pop off if we break above the 13 EMA. Yeah, and so it would be nice if we had, here, let's see here if we have the 13 EMA here. Okay, so we are struggling to stay above the 13 EMA here, but once we start breaking above it and staying slowly above it, that could be some serious signs of fireworks to come, much like we had last time. So that would be a very positive sign. So because there's a lot of buying pressure down here, somebody's holding this market up, and I think we could go a lot higher from here. So I want to switch my bearishness to bullishness here, definitely.
All right, all right. So that sounds already very, very good for everyone who wants to have that trading set up. Go in our Telegram group. It's in the pinned comment on the top of the description, on the top of the pinned comment also, and it's completely for free. We will share it with you. And just to put it together before we go into the economic stuff, you have the 61.8, the long-term buying zone. You have the end of the AB equals CD move. And also you have something we shared in our last video, which is popping up right here. You can check it out. So it's a massive amount of confluence coming together, pointing towards the fact that we have probably hit bottom. Not like 100% certainty, but probably hit bottom. So thanks, Da Vinci. And yeah, we wanted to talk about something else, and then the stage is yours again. And that's this nice chart here, guys. You can see it. You can see that between 2009 and 2019, we actually had, and that's a current US dollar price return of 368%. But the most important thing is that this is not only the second longest bull run in history, it's also the second strongest one in terms of US dollar denominated gains. But what Da Vinci and we actually thought here was, let's pull out the real inflation rate, let's pull out taxes and everything what comes together and see what's the real gains within the last 10 years. And if you do that, you can actually see how much is the prices on the stock markets, how much are they diverging from the real growth of the economy? And if that divergence is actually heavily and big, then you know that this is a very, very unhealthy situation and that there is a recession which is really knocking on the doors. So now, Da Vinci, the stage is yours. Can you please let us know what we did there in the calculations?
Yeah, well, we started with this. We started with $1,000. Let's just say you started to invest with $1,000, right? In the 80s, right, from the 88 to the 2000s, you would have made $5,800. That not bad return, man. Not bad. You're smiling, right? That's big money. Same here, right? This is nothing to laugh about, right? $3,680, right, for the last 10 years. I'm pretty happy with that. That's some good money, right? You're thinking, right? And then, but we need to like figure out what the real inflation rate is. And if you head over to shadowstats.com, you can see here that the real inflation rate between 1988 to 2000, it was approximately about 6%. Which is not so bad. You don't want to listen to what the government says because obviously the government always lies to us. And so the real inflation rate between 2010 to today was approximately 10%, right? As you can see. And I remember back in the days that around this time frame, Google was giving out its employees all 10% increases in their wages every single year starting back here. And I'm like, what the heck's that all about? Because they know what the real they know what time it is.
They wanted to treat their employees well. And I want to remind on something. Carl from the Moon, he just mentioned also on our channel, he was quoting someone. This is what you can see there, the CPI, the Consumer Price Index. It is also called the CPI because the real CPI, like the official CPI, the red one on the downside, it does not really reflect the increases of the consumer prices. If you take into also things into account which are actually heavily rising in prices, you can see that the numbers are much, much higher. And yeah, Da Vinci, that's what we actually took, and we discounted the gains with these numbers.
Exactly. Once we discounted the gains, right, you see that, well, actually, your real gains were 200% here. In the 80s, in the 90s, really. Let's just say 90s. And then the last decade, it was for 41%. You're like, well, you know what? 41% is not so bad. I mean, I'm happy with that, right? But wait a second. Hold on here. Do you know that there was taxes on those gains you got? So we have to take those taxes out, those tax gains, right? And so let's just say in the Commonwealth, most people on average, right, is 40% taxes. And so you have to your after tax gains, right, is 3,000 in the 90s, $3,892, and $2,600 for your for the last decade. So that's still, you're thinking, yeah, I'm good, still good. But hold on, we have to take out the inflation tax now out of that. And so once we take the inflation tax out, your gains are like 100% in the 90s and only 0.55% in the last decade.
Exactly. And that's Da Vinci. That is for buying in 2009, for buying the bottom and selling the top today, and also just buying the index of the S&P 500, which was one of the most successful ones at all. So buying the bottom, selling the top, buying the best index out there, you end up with a real after-tax, after-inflation adjustment of below 0.55%, not per annum, but per cycle. So this is actually crazy. It's mind-blowing. And this shows us that the stock prices are actually just inflated by the additional money which is being pumped in the market, and that is not reflecting real growth. The stock markets are not equaling the economy, and that's the best example how you can see it. And I mean, Da Vinci, that's extremely, extremely valuable. What would you say, taking all this knowledge now into account and looking at the next 1 year, 1.5 years or so, about the recession? Do you think that these numbers actually point even more towards the fact that it is, like just knocking on the door? And do you have any time frame?
Yeah, well, America is like a consumer-based economy, and yes, this is really destroying the middle class. This wealth theft through both inflation and taxation. There was a little bit of growth. So if you were to just subtract taxation, there was growth in the economy. But with the taxation, right, that growth is transferred to the government and taken away from the average person. And you can see that because people are actually taking out mortgages. They're going from they're refining their houses from a low interest rate to a higher interest rate on average in North America. And why would they do that? Why? It's because they need the cash. They need to stay afloat, and because the government, the inflation rate has robbed them completely. And I really think that we could see a recession around the corner, if not next year, for sure in 2021.
Yes. So everyone, you have to be prepared. And one last thing before we come to the very important updates we have to share in the end. How would you personally prepare for this financial crisis? A very silly question. Would you buy the S&P 500 right now today? Or would you buy something else?
Hells no. There's no chance in hell that I buy any stocks or anything like that. Because, I mean, honestly, those things, like everything that you have that's controlled by the government, right, where it's like completely regulated, you want to stay completely away from that stuff. You want to get into gold, silver, Bitcoins, cryptocurrency, anything you could hold in your hands directly with you. You want to hold it for the next recession.
One thing, and it is being made harder and harder for you, for example, to buy into gold. In Germany, it's just very, very recent news. They lowered the amount of gold you can buy without any passport or so from 15,000 to 10,000, and now from 10,000 recently to 2,000. So today and yesterday, the German people, they were standing in lines to buy gold. It was crazy, like the gold rush. So, and you will see that probably in all the countries because the governments are scared. They are scared of people flying into these safe havens. And there's one thing where you might be able to buy more than 2,000 and also circumvent some pre-security measures, and that's decentralized technology. That's the best type of money which has ever been available to humans, and that might be Bitcoin. So everyone be prepared. Gold, silver, Bitcoin, these are the things you can actually prevent yourself from being completely robbed by the government and the flawed financial system. Da Vinci, we have the new year is coming and we have amazing conferences to go to. We want to meet the following, and you have one conference to share. I have one conference to share, and afterwards we have some other news. Who wants to start? You want to start?
Yes, I'll start with my conference. I'm going to be going to Anarchapulco. This is between the February 10th to the 20th. That they have like lots of that's the whole event, but there's like the real Anarchapulco events, the 13th to the 16th. There's going to be a lot of different things going on, and I'll be there. I was going to fly out on the 8th, be there for the 8th, but actually I'm going to be there for the 10th. And I hope to see all you guys there. And if I'm also going to give away 2 tickets if you post a comment on my last video that I did today, and you write evolve in your comment, right? And I'm going to pick a random person who writes evolve, and you'll get 2 tickets to Anarchapulco 2020. Hope to see you guys there.
And for everyone, the link of Da Vinci's channel is, as always, in our description down below. Make sure you check it out. Carl was also talking about that conference very, very positively, so that might be a very good thing. The next one also we are attending, also with Carl from the Moon, is the Chain2020 in Hong Kong. And the beauty about that is the tickets are completely for free. It's an educational event with speakers. You can see Carl from the Moon is there. I'm there. We are both speaking, and we have interesting stuff to share with you guys. So if you are nearby, make sure you check it out. Chain2020. It's the biggest educational event in Asia, and of course, it feels very good to talk about it if the tickets are for free, because education should be for free, and they're actually paying for all the stuff for the venue, so it's very, very nice organizers. Make sure you check it out. Also, the link is given down below. We would love to see some of you people, and as always, we have this Bybit bonus if you want to trade anyways. If you're an experienced trader, 24 seconds to set up an account, and then a few more seconds to have the requirements for the $90 bonus on Bybit. So guys, make sure you check it out. Make sure you smash up the like button for that video. And now, Da Vinci, one thing. There's a poll popping up. Let us know in which year will be the recession, the next one. 2020, 2021, 2022, or 2023. You can choose, make your guess. Da Vinci, do you have anything to share before we wrap up today's episode?
Yes, I'm going to be releasing a new version of Pandora's Wallet, right? Just some bug fixes and stuff like that. I'm going to try to get it out today, but it's going to be hard pressed because I had a lot of things to do today. But I'll do my best. If not, it'll be on the Thursday. And we're working hard. I was going to go to that conference with you in Hong Kong, but I want to stay here in Chile and work on Pandora's Wallet and get that new feature where it's going to be working like local Bitcoins, where you could actually request somebody to sell or buy crypto, any kind of crypto inside of our wallet. So that's going to be an awesome feature, and I'm looking forward to that.
Yes, for all the German ones who just got hit by this new law. But of course, don't circumvent the law. You want to stay legal. But that's actually a very, very nice feature. So thank you, everyone, for watching. Let us know in the comment section, what do you think about today's episode, about today's content, about the recession, and even more important, about that very nice divergence, which is just confirmed. We will see each other very soon in the next decade, in the next year. Tomorrow, most probably, or day after tomorrow, on our MMCrypto channel and on Da Vinci's channel. So make sure you smash up the like button. And as always, guys, Da Vinci, few words to say before I wrap it up?
Don't get wrecked.
Do not get wrecked, guys. So we will see each other very soon, tomorrow, day after. And as always, guys, as always,